Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Retail and energy are on the value stock pick radar. That's Tracey Ryniec's radar because she is our value stock strategist here at Zacks.com. So, on the retail side, Men's Warehouse, MW, the ticker symbol, is what you've written about recently. Yes. You say, don't count the retailers out just yet.
Right.
Why?
They're doing better than what most people think. I mean, even the cheap retailers, the upper end retailers, and these middle of the road retailers, kind of where I put Men's Warehouse, you know, their sales have been good. Men's Warehouse actually just reported its second quarter on September 7th. So that was more recent than we've seen from a lot of the other companies that have been reporting. So this is, you know, recent sales data, and they beat the estimate for the 9th quarter in a row, and they saw sales up 22% over all of their chains. Even over Men's Warehouse, which is their largest branch, they saw sales up 10.9% for their same store sales, which is pretty healthy. They're seeing increased foot traffic in the stores, and they're seeing tuxedo sales, which have been strong actually for a couple years now.
Really?
Still remain strong. So
I'll have to get my new one.
I know. I guess a lot of people are, you know, buying or renting the tuxedos. So Men's Warehouse has a lot of good things going for it here. They actually also gave some guidance for the rest of the year, and they saw earnings per share between $2.13 and $2.20, which was a little under where the analysts were. So the estimates are rising. They also saw double-digit sales growth through the end of the year. So they weren't saying things are falling off a cliff or it's doom and gloom. So their story looks pretty good. And the shares, they sold off in August, as we've seen with a lot of companies. And then they've just kind of been treading water here. Even with this good earnings report, it wasn't enough to give it a boost. It's fairly cheap. It's trading a little over 11 times. So their story looks pretty good.
That pullback, you say, though, creates kind of an attractive entry point.
It does. It does. Yes, they're cheaper than they were before the August sell-off, for sure. So they're definitely much more in the value range here, and their story is good, you know, going forward because they just reported, and so they're not seeing anything bad for now.
So when you consider the retail stocks, you have to consider them individually rather than as a group?
Yes, I think so. But even as a group, I've been covering a lot of them on the value side.
Yeah, I noticed.
Yeah, and like I said, across a whole bunch of the different metrics of retail, we've been seeing pretty good numbers. So.
Okay. Well, Valero Energy, VLO, the ticker symbol, is in the energy category for you.
Yes.
And you say this is a dirt cheap stock.
It is. This is among the cheapest stocks I've covered in a long, long time.
Not just cheap, dirt cheap.
Dirt cheap. I mean, they're trading at a little over 4 times earnings. They're Zacks #1. The estimates are rising. They're a refiner. They also run service stations. I think a lot of people have heard of the Valero name. Yeah. They, you know, are one of the bigger refineries, but they are benefiting from the difference in the WTI and the Brent spread, which a lot of the refiners are benefiting from. It was at a record last quarter. It has since come down, but it's still very healthy for this company to make a lot of money. And as you can see, the estimates are still rising, even just recently within the last week, which is also unusual given, you know, worries about the global economy and just everything in general. These guys have rising estimates, massive earnings growth for this year compared to last year because they only made $1.70 last year and they're supposed to make over $4, as you can see. The chart is really interesting because they had a big run up while this crude spread was rising into 2011, and then they've lost almost all of the gain. So that's also a reason why they're really dirt cheap here because, you know, everybody's been selling the stock. But if you believe the company and what they're seeing down the line and the estimates here, they are really, really cheap.
Okay, do you own either of these two?
I do not.
All right. While you're waiting for Tracey to return in video format with some more value stock picks, don't forget you can always check out at Zacks.com in the stock picking section of that homepage for other stock pick ideas. 4 new ones for you daily, as a matter of fact, so check often. With Tracey Ryniec, I'm Terry Ruffalo.